Hey YouTube, what's happening? Chris here. Want to bring you something I was reading today, studying in my encyclopedia of chart patterns. It's Double Bottoms, Atom and Atom. And we're going to go through this. This is by Thomas Bulkowski. And guys, what we're going to be looking at today is this double bottom. Now, what we have on the chart here, this is an atom bottom and this is an Eve bottom. And I wanted to show you guys the difference. Between an atom, it's very sharp, and sometimes it can be only in one day, that reversal, one-day reversal. And Eve, you're going to see how it's more rounded, and they said it's almost like blades of grass down here. You see all these little wicks, how they round out, and then you move to the upside. So today we're going to be doing the atom though. So this bottom would be just like this on the other side. So just imagine what you see here, right over here. And what this says about the double bottom atom, it says the appearance: double bottom patterns with narrow or spiked bottoms break out as upward. Reversal or continuation, it's a short-term bullish reversal. Performance rank, it's 10 out of 23. Volume trend is downwards. Throwback happens 64% of the time. The average rise is 35% in this pattern. Surprising findings: tall patterns perform better than short ones. Performance improves for those patterns with a lower right bottom, a declining volume trend, dome-shaped volume, heavy breakout volume, and volume heavier on the left bottoms. So always look for that stuff. That's very important, those characteristics that I'm sharing with you guys. And also always remember, this really has to happen after a nice sharp downtrend here. You know, like you've been in it for a while. Say these are even on the weekly, you know what I mean? Time spent going down, and then you see this bottom, this real sharp bottom come in. It's almost like a man on stilts, basically, is what you'd see. So imagine this right over here, and it looks like a guy standing on stilts. And it says right here next in the book, it says volume is higher on the left bottom than on the right. That's something very important to understand and mark down. Really put that in your notes. Downward price trend, look for price to be trending downwards into the pattern. The characteristics: downward price trends downward leading to the double bottom and should not drift below the left bottom. Bottom shape: narrow V-shaped bottom, sometimes composed of long one-day spikes. So that's our one long day spike right here that he's talking about. Rise between bottoms at least 10% from the lowest valley to the highest peak between the two bottoms. Taller patterns perform better. So they're talking about this rise right here. You put in this bottom, that rise right into there. So that's something to pay attention to. Bottom separation: bottom should be at least a few weeks apart. Best performance is 3 to 6 weeks apart. Wider than 8 weeks and performance deteriorates. So that's something interesting. Price rise after the right bottom. Price must close above the confirmation point without first falling below the right bottom low. And then bottom volume, usually higher on the left bottom than on the right. So this is definitely a pattern you want to keep in your toolbox, guys. This double atom bottom coming down real sharp, and then you move up that 10% or more, and then you come back down here and you'd have another sharp move like that, and you'd come up and you'd look to break this neckline. Do you see in green? That's the neckline. And then from there, once you saw that break and you saw those closes up above that, the price then started to run and started to make that move. And that's where they were talking about that 30-some%. I think they're 36% we said rise, and that's what they're talking about. So that's something special to look out for. And you know, guys, this is just another pattern that you can really put in your toolbox. And we'll be doing, the next one we'll be doing is on the Eve double bottom. And it's basically just like this here, that nice rounded bottom. And we'll talk about how that performs. But in this book, it talks all about, you know, like the bear market, how well it performs in bear markets, how well it performs in bull markets. Tons of different statistics I'm not going to bore you guys with, but there's so much good information. And just taking one of these patterns and studying them, you know, even this pattern, just say, hey, I'm going to study this one today for 10 minutes. You'll learn so much about it, and then you can put that in your toolbox and you'll always have it. And then you'll learn, you know, the Eve double bottom and the Adam and Eve double bottom and how they perform and everything. And get yourself a little journal and write all these things down. And that's what I want to bring to you. I hope this sparks, you know, an excitement to learn about these patterns, because if you can see these patterns, you can spot these out. You can put yourself in a good position to win. Remember, we always cut the losers short, get rid of them, and we let the winners run. That's the name of the game. That's what we have to do in this space. So put this one in your toolbox, guys. I hope you're having a wonderful Sunday. If you like what we do here, like, subscribe, hit that notification bell. I appreciate each and every one of you, and I'm not sure which pattern we're going to do next, but we're going to continue to go through these patterns, and I really want us all to learn together. That's my goal. God bless you all.